Hello, my name is Mike Thompson. I used to be a manufacturing process engineer for Boeing. What I want to talk about today is tax reform. We've all heard about it for decades from all the politicians and economists, and so far we don't have any results. And I decided, what the heck, why not take a crack at it? Maybe what this problem needs is a process engineer. So first, let's look at today's federal tax system. We don't have one federal tax. We have at least 10 different federal taxes. They all have their own rules, their own guidelines, their own forms, their own legislation, their own bureaucracy. If we look just at personal income tax, which brings in 50% of the revenue, we have to account for at least 25 different kinds of income, all with their own rules, forms, et cetera, et cetera. I counted up 17 possible deductions you can take, 13 possible credits you can take, all with, again, massive number of forms, calculations, bureaucracy, et cetera. And on the corporate income side, we've got this big laundry list of all the expenses and all the revenue sources that every business owner has to track throughout the entire year, all to get these numbers that will be put down as your personal or your corporate income tax. And with all this complication, the tax system doesn't do its job. In 2019, our deficit was $1 trillion per year, and that was before COVID happened. So we're not even paying our bills with the system. So as a quick snapshot, when you look at this process, there's a lot that isn't optimized. Let's just put it that way. So what I have put together, I have called my plan 4.5, and it's called that because with the numbers I have, it should raise $4.5 trillion a year, which is $500 billion more than what the current tax system raises. And it should put an instant dent into our deficit levels. Now, there's only two taxes in this plan. There's a wage tax, wage or salary tax. You get a paycheck from your employer, you take out 13.6% of that, and that becomes the wage tax that goes to the federal government. Note that all the other forms of income, pensions, Social Security benefits, dividends, interest, capital gains, selling your house, selling stocks, those are not taxed. The 13.6 came from my estimate of what a person at the bottom of the financial totem pole would pay, a person whose income is low enough that they're not paying income tax and they really don't have any wealth, but they're still paying tax. They're paying Social Security tax, they're paying Medicare tax, they're paying excise tax, and so they are paying tax. They are paying a significant tax. Now, to add to that, though, this wage tax that would apply to everyone, that isn't enough to generate all the revenue that the government needs. So we add a net worth tax. And if you're under 65, it's simply 2% of your total wealth up to $13 million. That includes your bank accounts, stocks, bonds, other savings, home equity, whatever wealth you have. And if you're lucky enough to be a person who's got more than $13 million worth of total wealth, those dollars above $13 million, they get taxed at 4%. Now, we do need to put in a provision for those who are over 65 and retired, because this is our population that has limited income, but they will tend to have substantial net worth. They'll have home equity, and they will have savings that they've built up over the years. So the first tax break that they get is because they aren't making wages anymore, they're not paying this wage tax. And their income will be primarily pensions, Social Security benefits, annuities, things like that, and selling stocks. Those things are not taxable under this system. And the second part of their tax break is that they get a free pass on the first $1 million of their net worth. And only when they get above $1 million do you start on the 2% and 4% taxation. And that's it. That's the whole system. Everything else you saw on the previous page is eliminated. If you tell me what your wages are, what your net worth is, and whether or not you're over 65, I can calculate your tax bill in 15 seconds, literally. This enables a 99% reduction in the time, expense, and effort that it takes to administer this tax system. The bureaucracy would be much less. The need for lawyers and accountants would be much less. It's easier on the taxpayers, and it actually raises more money than the system we have now. So let's take a moment and look at it on an individual basis for the current system. So let's take a person who makes $100,000 income. So on average, this person with $100,000 a year would pay about $22,000 federal tax. And you'll see all these taxes here, they're almost all entirely income-based. So the poor people are on the people with no net worth, no wealth, no savings are on the left-hand side of this scale. And the people with millions of dollars of savings, maybe they inherited money, are on the right-hand side of the scale. And the point of this slide is simply that everybody at every wealth level, as long as their income is $100,000, they all pay about the same $22,000 in total federal tax. So what the new system does that changes from the past is, instead of having this flat line where everybody at any wealth level pays the same tax, we now have those with less wealth pay less, those with greater wealth pay more. So the break point turned out to be $430,000 of net worth for a person with $100,000 income. So if you have less than $430,000 net worth, you pay less tax than what you do now. And as you go farther you gain more and more and more wealth, you pay higher taxes. So the question is this fair? Do we place an undue financial hardship on the people at the upper end of this scale who have been lucky enough to establish, a high level of wealth? So we look at, here's this guy who makes $100,000 income, but maybe he inherited money or something, and he's got $3 million. And yes, we're asking him to pay $74,000 a year in federal tax instead of the $22,000 that he pays currently. And is this a fair thing to do? Does it cause him an undue financial burden? And the argument in favor of it is that if you've got $3 million net worth, you should be able to take the vast majority of that and invest it. And if you invest a couple of $1 million, your annual return, you'll get a very healthy annual return on that money, and somewhere $100,000 to $200,000, very likely. And so you are generating, the fact that you have wealth allows you to generate money. And so when you take the money that you earn off your return on investment and you add it to the $100,000 income that you've got, I think the argument can be made that it's fair that you pay this extra $54,000 in tax, because you're generating enough money to pay that tax and still have plenty of money left over for living quite well. The other thing to point out is that your return on investment, say you put $2 million into stocks, you get $150,000 back at the end of the year. You can cash out those stocks and you don't pay any tax on that, because we only have a wage tax. We don't have a capital gains tax anymore. So anyway, that's the big question, is for people up in this range, are these tax levels fair, and or do they apply an undue financial hardship? That's the question that the public needs to answer about fairness of this system. So then very quickly, looking at wealthier people, if you have a person who's say got $1 million income, you got very much the same pattern. If you're less than $10.2 million total wealth, you pay less tax than you do today. If you got more than $10.2 million worth, you would pay more. You see the bend in the curve, that's because you passed the $13 million line where you transition from a marginal tax rate of 2% to 4%. But again, this person with say $30 million saved up, he can invest most of that, get a very large healthy return, cash that out and not pay tax on that, and use that to pay his taxes as well as his living expenses. And so I think the people up at this end of the curve are going to continue to do just fine, even though, yes, they're paying some more, but that's the fairness decision that has to be made by the public. Now, the last thing that I want to do is project out into the future and illustrate what this will do to the long-term federal deficit and sustainability of our economy. So first, we have to look at the past. So this is a curve showing from 1989 to 2009. And what we're tracking is the federal spending and the federal tax revenue have very much, there's been ups and downs, but they track right along with gross domestic product, you know, essentially the national income or the national output of goods. And they all follow right closely, and they gain an average of 4.5% per year. And then if you look at the aggregate wealth of the nation, it has grown much faster. So our income is growing at 4.5%. The actual wealth that we are gaining is growing at 5.7%. And this is a consistent pattern over 30 years. And so my assumption that I'm going to make is that once we get past the COVID mess, and hopefully Ukraine ends, we will return back to this stable pattern that we had for 30 years. So for the long-term future, I'm going to make the assumption that these 30-year patterns will return and we'll get back to this kind of normality. Okay, but we do have to look at what has happened with COVID. So we were going along, the red line is federal spending per year, the blue line is federal revenue tax revenue per year. In 2019, we had a deficit of just about $1 trillion. Then COVID came its way toward us, and we launched into all this stimulus spending. And yes, it blew up the deficit. And by 2021, we're going to record something like a $3.7 trillion deficit. And then now, as we wind down out of the COVID era, the spending is coming back down, the deficit is coming back down. I'll just touch on one note. You know, was this stimulus worth it? Yes, it blew up the deficit, and we have this big debt to pay off now. However, at the same time, our national wealth skyrocketed from 106 trillion up to 137 trillion dollars as of the third quarter of 2021. So in those 2 years, we increased the deficit by 2.7 trillion, but we kept the economy going so well that the net worth increased by 31 trillion. So I will leave it to other people to debate whether the stimulus was money well spent or not, but those are the considerations to take. Anyway, so my point here is that we're going to come out of COVID with about a $2 trillion deficit instead of the $1 trillion deficit that we had at the end of 2019. So if we keep our current tax system and we continue on the same trends we've had for 30 years, we're starting with this point now where we have about a $2 trillion deficit. And this chart assumes that the red line federal spending will continue, will get back to increasing at 4.5% a year. And the federal revenue, it will also increase at 4.5% a year. So if they grow lights out to 2050, our current $2 trillion deficit will expand to $6 trillion. So that's a really big deficit. The economy will also grow proportionately. So the ratio doesn't change a whole lot, but it's still a big deficit, and different economists would argue whether this is something we can tolerate or whether it would cause a catastrophic breakdown. So my point here is to show if we go to this plan 4.5, where we begin to tax wealth at the tax levels that I have projected, it doesn't completely eliminate the deficit because we're starting from $2 trillion behind. But over the next 28 years, we would cut the deficit down. Instead of $6 trillion, it would be $1.5 trillion. And as a proportion of the total economy, it would be much smaller even than what we have now. So this puts us on a sustainable path. And whether we opt for a big government approach or a small government approach, we can easily tweak those tax rates and levels and the break points to make this revenue be whatever we want. It's literally a 15-minute exercise to go into the spreadsheet, change what the tax rates are, and generate whatever revenue you desire. So that's the last of the main charts that I have. I started out with this whole thing. The objectives were to make something that was vastly simpler, less expensive, and easier to control. It would keep national wealth growing. Nobody gains if we tank the economy. It helps with the deficit. By starting to tax wealth, we enable ourselves to address wealth inequality. It hopefully gets us past COVID. And really my main point here, and the tax break levels that I've chosen, was my best effort to avoid any situations where anyone on any point on the economic spectrum is unfairly burdened. The wealthy people pay more, but I don't think any of them go broke. I think all of them do just fine. But that's my position. So my question to the audience is, does this system accomplish these goals? Are there fatal flaws in this system? If so, can they be fixed? Can we make this work? Because it has this great advantage of being so vastly simpler than the system that we have now. And I will just leave you with this visual. Do you want the option A system with all these bells and whistles and knobs, and it's like flying the space shuttle? Or do you want this simple system where you tell me your wages, you tell me your net worth, and you tell me if you're over or under 65, and I can calculate your tax in 15 seconds, and the expense of all this goes down by 99%. So that's all I have. I have a couple of backup slides for those who want to dig deeper. I gave an example of how the tax calculations are made. It is simple to tweak the tax rate percents in the spreadsheet to regenerate a different revenue level if that's what you want. I have one page on the logic behind the system. I have a list of questions that I suspect I would ask if I were the audience. So you can look at those and see if they answer your questions. Hopefully they do. And lastly, I have a list of the data sources that I use, both to go into this summary presentation that you saw, but also into the deeper dive background information that I got. But this is where I got all the data. I do very much welcome constructive comments. Thank you very much. I appreciate your time.